Good morning. I'm Ellen Mitchell with Remax All Stars, your heels on the ground in the Miami Fort Lauderdale area. And I am so excited to be having a conversation this morning with Yanni Garcia. Good morning, Yanni.
Good morning, Ellen. Thank you for having me.
You are welcome. And through the miracle of technology, I am in Fort Lauderdale, Miami area, and you are in Madrid.
I am. Yes, I'm in Spain for a short vacation.
Nice. What is the time there? It's 11:12 a.m. here.
It is, I have my all of my watches set up to Miami time, but it should be 5 p.m. here.
And are you doing, I know when we were in Spain last year, we were going out to dinner late every night. It took a little getting used to, but it was quite fun. Is that how you're rolling there?
That's the beauty of Spain because I work Florida hours, right? East Coast hours. So at 10 o'clock at night here, it'll be, your 5 o'clock. So by the time I'm done with work, it's around 10 o'clock at night. I can go out and every restaurant is open. It's great.
That is so cool. Only through the miracle of technology.
Yeah.
So I had the opportunity to meet Yanni a few years ago. We both belong to the same, kind of working by referral type of mentality and really being relational. And Yanni is a lender. He did a presentation recently on I guess you would call it a newer program
hmm
through the Big Beautiful Bill. And once he did the presentation, I was really interested and curious about it. I thought, if I don't know that much about it, and I'm pretty involved in every area of real estate, that I'm sure that other people don't know about it either. So if you could first just tell us a little bit about your background, how long you've been working in this industry, and what led you to specialize in this area.
Sure, sure, yes. So I am a mortgage broker. I do residential and commercial financing. We do everything from, your traditional conventional FHA jumbo loans to more niche loan programs like financing for foreign national investors, ground up construction, fix and flip loans, home equity lines of credit, you name it. We have the largest portfolio of wholesale lenders in the country. So that gives us access to over 300 wholesale lenders, thousands of loan programs. And so naturally, we help a lot of investors as they're looking to, scale their real estate portfolio. And when the Big Beautiful Bill rolled out last spring, they introduced a new law called 100% bonus depreciation. And what 100% bonus depreciation allows us to do is to essentially front load a large portion of the depreciation of a property in year one, right? So instead of waiting 27 years to depreciate a property, we can now take about a third of the value of that property and write it off in year one. So that's really the big advantage for investors who are looking to offset some of their income. When you can depreciate so much in just the first year, it can be a great tool for offsetting active income tax.
And for those who aren't familiar with it, can you explain the cost segregation and depreciation acceleration in simple terms?
Sure. Yes. So cost segregation is essentially how you unlock that 25 to 30% bonus depreciation on year one, right? So um, normally, you get to depreciate a property over 27 years. That's the shelf life that the IRS has put to a structure. I don't know where they got that 27 and a half years, but that's the life cycle of a property in the eyes of the IRS. Now, the bonus depreciation gets unlocked through a cost segregation study. And a cost segregation study is essentially an engineer who goes to your home and identifies all of the different components of the structure, right? Because the structure, which is what you get to depreciate, you don't depreciate land, you can only depreciate the home itself. So let's say a home is you buy $1 million property, you're going to depreciate 800,000, which is the value of the structure. Well, the engineer will essentially break up the structure into all of its different components. The windows, the stove, the light fixtures, the tiles, the roof, everything that makes up the structure has a different life cycle, depreciates at a different pace, right? Uh, Much faster than 27 years. And at the time that you buy the property, there, some of those items could have already been well into their life cycle of depreciation. So essentially, that's how that bonus depreciation and that accelerated depreciation is calculated, is by essentially breaking up the home into all of its little components, and unlocking that additional depreciation just based on the age of those components and the overall depreciation life cycle of those components. I normally say that about a third of the value of the home is what you're going to be able to unlock through a cost segregation study. That's generally what I've seen from experience, anywhere from 20 to 30% of the value of the property, of the structure. So if the structure is 800,000, you're looking at about 25% or 30% of that to be able to depreciate in year one.
Now, is this for only residential properties? Is it also something that you can do with multifamily, like duplex, triplex, quadplex, apartment building, commercial? Is there an asset class that this is specific to?
Yeah, so great question. You can do it with any type of residential or even commercial property. Where there is something very interesting happening is in the short-term rental space, right? Because there's an element of this, let's call it a tax savings technique, called they call it the Airbnb loophole, right? Because, let's say you buy a $1 million property, you get to write off, 30% of the 800,000 of that structure. Let's call that 300,000, okay? Well, bonus depreciation on real estate can only be used to offset passive income or rental income, right? It cannot be used to offset active income, like W-2 income or 1099 income or self-employed income. However, if you turn the property into an Airbnb, well, you get to reclassify that massive amount of bonus depreciation from passive to active. So now you can use that $300,000 to offset W-2 income, to offset self-employed income. And that's where it gets really interesting because, you know, a lot of times, a lot of my clients are able to offset, 80, 90% of their income tax on a given year by buying one Airbnb property a year.
I should say that neither of us are CPAs, so anything that we're discussing today, people should definitely talk with their accountant about their own situation and to talk about the tax laws. The cost segregation study, who actually performs the cost segregation study? And I know that there are different kinds. There's a DIY, there's kind of different
Mhm.
types. Can you talk about what is the typical cost and what are the different options?
Sure. Yeah, so the cost segregation study is usually done by an engineering company that specializes in cost segregation reports. Um, we use one in particular that, we find that's very affordable, and they give great service. They can range, they're usually anywhere from, about $1,000 if you do it digitally, right? Where you don't have an engineer come to your home and do the assessment in person. It could be maybe two, three, four times the cost if you have a in-person cost segregation study. I usually opt to do the digital version just because it is more cost effective, and you have what you need to give your CPA the cost segregation study to do the offset of active income tax.
So, one question I've heard is, and I actually had this question myself, if someone purchased an investment property several years ago, is it too late to take advantage of the depreciation acceleration?
Well, the property needs to be put into service the year in which you're seeking to do the bonus depreciation. So as long as you can demonstrate that you're seeking bonus depreciation for the year that you're putting the property in service, then that should be sufficient.
What does putting the property in service mean?
Um, Putting it on Airbnb, right? Listing it on Airbnb is because if you get audited, right? And it's good that you mentioned, we're not CPAs. This is something you definitely want to vet with your CPA. And oftentimes connecting us with your CPA could be a great strategy because then we can kind of brainstorm, hey, how much income are you planning on making for 2026? How much real estate do you have to buy in order to offset the majority of that? And we can come up with a strategy together. Um, but the key thing from the IRS perspective is that if you get audited, you need to show that the property was, on Airbnb or VRBO and one of these short-term rental websites, because you need to show that, hey, it was put into service on this year. You don't necessarily have to have bookings that year, right? So I did a real estate transaction in 2025 for the purpose of taking advantage of this technique. I was able to offset $75,000 in taxes by buying an $800,000 home. Um, and I put it into service in December, right? So it's the key is putting it into service, being able to demonstrate that it's been marketed on the year in which you are seeking the bonus depreciation.
And Yanni, can you do this whether you're purchasing the property cash or whether you're taking a mortgage on the property?
Sure. Yeah, you can do it any way. What's interesting with doing it with a mortgage is that, in my case, you buy, you can buy a property with 10% down. Let's purchase it as, let's say it's a second home. You can put 10% down. And oftentimes when you look at the numbers, like if done strategically, what you put down for the property can sometimes be covered by the tax savings that you'll unlock by putting that property into service and doing bonus depreciation in year one. That was the case for me, right? The down payment was offsetted by the tax savings for that year.
So can you I was going to ask you to give me an example. If you could walk us through that one, just as talk to me as if this is something I've never heard of before, and just kind of step by step what the process was, what the savings was, what you did, just kind of from A to Z as if I've never heard of this before.
Sure. So the property that I purchased was 800,000, right? Um, the bonus depreciation or the cost segregation study unlocked about $250,000 in bonus depreciation, um, which means that by using the Airbnb loophole, right, and putting the property into service the year in which I was to owe that $75,000 in taxes. That $75,000 in taxes was based on an income that was almost equal to the amount of the bonus depreciation. So you have $250,000 in bonus depreciation, you have $250,000 in income. The bonus depreciation offsets the income, right? So now my tax return, my tax liability went from around 76, 77 to 2,600. And the major component was that bonus depreciation that I was able to use to offset that income.
Okay, I just want to make sure I heard the numbers right. So the about 76, 77,000 that you had as a tax liability went down to a tax liability of about $2,600 by
Hmm.
utilizing this tool.
Correct.
That's pretty only in America,
Yeah, it's pretty significant. And obviously that tax liability won't go away, right? It just now lives in the home. So you don't necessarily get a free pass, right? What you owe will still be owed, right? but the liability lives in the home. So the key is, not to sell the home because then the IRS will claw back some of that bonus depreciation. You'll want to, you'll want to hold it or do a 1031 exchange if you do sell the home, so you can uh, defer that tax liability to the next property.
I see that my background went away again, so let's see if I can get it back. No, you might just have to see my husband working in the background. So it is what it is. We're all working
All
remote
right.
this at this point, so don't judge my messy home office. And I had a couple more questions. One of them was for someone watching this interview who thinks they may qualify, what are the first steps they should take? Who should they speak with? Would it be the lender, their
Yeah.
CPA? Where's the
Yeah.
first place that they go?
Yeah, so, having a conversation with your lender, assuming that they're familiar and well versed in this program, could be a good first step, right? Because for example, I have a tool that I use where I can essentially calculate how much bonus depreciation you can unlock from a specific property, right? So you can give me a listing and I can say, okay, based on this property, it's going to look like it's going to be anywhere from 2 to 280, right? Conservative versus optimistic. But I think the next this if you have an idea, right, of what your tax liability is going to be, then you're in a better position to start strategizing, okay, how can I use this to offset that liability? But if you're still not clear on what your tax liability is going to be, a lot of our clients are, deferring their taxes to October 15th, then having a conversation with your CPA or having your lender and your CPA and, connect over this could be a good first step, because that way you can kind of start projecting, okay, for 2026, my tax liability is going to be 100,000. Okay, let's back into a property or multiple properties so that we can offset a large portion of that.
Okay. And then I would add that they should loop in their realtor when they're ready, once they identify the kind of the price range that they're looking to purchase, perhaps the asset class that they're looking at, if they're looking at single family, multifamily, maybe, so
The realtor is going to be a incredibly key piece to this, because once you've realized, okay, I have to buy X amount of real estate to take advantage of this, remember that in order to do the Airbnb, in order to be able to reclassify bonus depreciation from passive to income to active, it has to be an Airbnb, right? And so I think a realtor serves a a key phase in this, because first you need to find a property that's going to be a good Airbnb property in a good Airbnb market, right? Because yes, the main purpose of buying the real estate perhaps is to offset this large amount of taxes, but you still want a well-performing income producing property, right? So that's going to be key. Also, some municipalities have certain restrictions or licensing processes to get an Airbnb. So you want an agent that can help you navigate the selection process, navigate, how, estimating how that's going to perform, and also making sure that is in a municipality that allows it.
100%. It's really important to work with the whole team, the lender, the tax advisor, the realtor that understands what they're doing, because you're talking about the IRS and governmental rules, and it's a bureaucracy, and we want to make sure that everything is done properly. So for someone watching this interview who thinks they may qualify, who thinks that they may want to just have a further discussion and find out more, what would you say the first step would be? Would that be something that you would be, if they reached out to you, could you walk them through this process?
Yeah, absolutely. I think the first step is having a better understanding of how the program works, and then figuring out, what's the best way to finance the acquisition, right? Um, I think then validating the strategy with your CPA ahead of October 15th, and then working with your realtor to identify the property that would make the most sense. That would be a good first step.
Okay, sounds good. Now, closing question. Is there anything that we didn't cover today that you think every real estate investor should know about cost segregation, depreciation acceleration, or opportunities created by the one big beautiful bill?
If there's one thing that I would leave as a takeaway is that this is a potential once in a lifetime opportunity, right? Why do I say that? Is because 100% bonus depreciation seems to be something that one political party has an appetite for and the other one does not, right? We saw this be put in place in a previous administration, then it was phased out, then it got brought back in, right? So the reason I say there's urgency is because we don't know if this is going to be around for, much for the next few years. We know that it's going to be around, but we just don't know if it's going to survive, because it is a huge tax break for real estate investors. And so I think that this is a unique opportunity to build generational wealth. It is a unique opportunity to diversify your retirement strategy because you're essentially buying income producing, appreciating real estate assets with money that you would have otherwise just handed over to the IRS, right? So I'm personally, I'm buying a property a year because I think it's just an incredible opportunity. Until this is no longer available to me, I will buy a property a year. And I think it's a huge opportunity for anyone looking to build generational wealth, enhance their retirement strategy with, with assets that otherwise would have gone to the IRS.
Very good. Well, I am going to put your information. I'll see if I can put it on the bottom. This is my first time using this platform, so we'll figure it out. And everyone got to see my one of our dachshunds,
He's
Oliver,
such a cutie.
in the corner there. But like I said, this is technology in real time, and we have to just roll with it. I thank you so much, and I'm sure that we will
My
be
pleasure.
having a follow-up to this, but I just want to thank you for your time and the information, and I hope that it's going to help a lot of people.
I think it will, and I'm really grateful that you included me in this conversation. And anything else that you need or your clients need, any questions, I'd be happy to help.
Thanks, Yanni. I'm going to hit
All
stop.
right, take care.